Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Thursday, January 28th, 2010. Well, a fairly large red-bodied candle today and a continuation of the first time frame downtrend. Previous day we had a lower high and a lower low. Today we have a higher high but a lower low, an outside day in bar chart terms, and it doesn't change the trend, so we still have that downtrend in place from the previous lower high and lower low. Now, as we suspected yesterday, the market was likely to test this 1080 region of support, and that's exactly what happened. We can see that we have a shadow on the bottom of this candle, and the buyers came back in once the market traded down around this level to close the market higher than that support at 1084. The market is trading within the cloud or the Kumo, and it's a fairly negative candle with a fairly large red body, which means that the sellers have made some fairly decent net bearish progress on the day between the open and the close. Quite a bit more bearish in those terms than the previous 3 days. And the sellers have shown some commitment, although they did lose some of that commitment as the market traded down to that support level. But they also closed the market in control, not extremely strong control, but still in control. With the market trading within the cloud, it means that we have a neutral market though, so we do need to be prepared for a breakout in either direction, to the upside or the downside, so we need to be very careful about taking any signals that we may get from our Ichimoku charts while the market's trading within the cloud. Now, the market is trading down below the Tenkan-sen and Kijun-sen, which are both at the same level, and that means that we have a bearish market in the medium to fast time frames. Both of those indicators are pointing down as well, and that reflects the downside momentum that the market built up yesterday and the previous day with the series of lower highs and lower lows. The market is bound within a range that's defined pretty much by the cloud here. We have strong support down around this 1080 level and down to roughly about 1075, where the bottom of the cloud is, but also at the top of the cloud here around the 1100 region, a round number where the market's finding resistance. And we can see we had 3 tests on that level here, including yesterday as well, where the market's rallied to the top of the cloud around that 1100 region and sold off again there the previous day and today as well. So that's a very strong big number for this market around that 1100 level, coincides with the cloud, the top of the cloud, and also this 1106 region here, up to, it extends up to around that region. If the market does take out that area with a breakout up above the cloud, we'd like to see a bullish breakout. We have some solid potential resistance on the way up, in particular at the Kijun-sen and Tenkan-sen around 1114, and then up around the highs at the resistance of the previous rectangle pattern around 1118 to 1120, and then 1133 is resistance. On the way down, if we do break out to the downside, then there's not a lot of support until we trade down to around the 1041 region, which is a previous area of resistance and held within a zone as support. So if the market does have a solid breakout down below the bottom of this cloud, there is potential for the market to trade down roughly about 40 points, which is may be quite significant. So we do need to watch how the market interacts with this 1080 region down to 1075, but also to the upside how it interacts with the top of the cloud around this 1100 region.